Welcome back to Pinkfish Inc. This is part 4 of the video series covering the double sevens trading strategy using Pinkfish. Today I'm going to go over the spreadsheet, and you can find it in the examples double sevens directory and then spreadsheet. Click on that, and I'm going to go ahead and just scroll down to the bottom of this and show you what the spreadsheet looks like. Now, I used to create spreadsheets in Excel and manually update the open, high, low, and close and adjusted close and volume data. And then I had functions that would fill in the rest of these things. But this is far easier to do it using Pinkfish and itable formatting. This is what you get. You get this information, and you get all the technical indicators, and then you can add some highlighting so you can see when the important things happen in the spreadsheet. So let me scroll now to the top, and I'll quickly go over the code, and then I can tell you how you use a spreadsheet for trading. So in addition to importing Pinkfish, we also import Pinkfish itable as itable. Itable is a separate open source project, and I've just copied the code into Pinkfish for convenience. So we define our symbol and our start and end date as usual. Then we fetch the time series. You should set use cache equal to false. That way you can get intraday updates of your spreadsheet, and help you decide if you're going to have to do a trade at the end of the day. And that's when I do all of my trading. At the end of the day, usually after hours, and SPY is so liquid, and gold and the other things that I trade are so liquid, I have no trouble trading after the markets actually close. Sometimes I will trade going into the close as well. So after that, we select the trade period, and we're going to set use adjusted prices equal to false. Then we add technical indicators. The ones that we need for the double sevens algorithm is the regime filter, the special SMA that gets us into trading quicker if you want to use that enhancement, and then the high, the 7-day high and the 7-day low. You might also use the ATR for setting stops. I don't do that, but you may want to do that. After that, we finalize the time series, and we get this data frame. Now, you could use this data frame for managing your trading, but it's a little hard on the eyes, just comparing all the numbers like that. So I went searching for an additional library that could help format a data frame, and I found itable. And there's a class in there called Pretty Table. And basically, it takes your data frame and creates a read-only data frame. Okay, so this code here will add the headers to the spreadsheet. That will be the labels for the columns. It also, after several rows, it will add those in again. I think it's like 20 it's 20 rows. It will add those in again, so you don't have to keep scrolling up to see what the column names are. And here is the code where you can highlight important events. So if we get a 7-day high, so if the 7-day high is equal to the current close, then we're going to make that blue. We're going to color that blue, and you can see that over here. I'll make this a little bigger. So that's when a 7-day high occurs, right here. Okay. Then for the 7-day low, it's something similar. We get this maroon color, red color. right? And then for the regime, we have a green. So you can visually look and see that we're allowed to trade when the regime is green. That's a go. Okay. If we don't have green, then we're not allowed to buy. We're still allowed to sell, but we're not allowed to buy. At the same time, we don't immediately get out of the trade if we're not green anymore. We stay in the trade until we hit a 7-day high. So let's see how this works out in practice. So what we'll do is, let's say it's 3 o'clock on a Tuesday, and we go in here and we run our spreadsheet. Okay, and we get some intraday prices. Okay, that's going to be on the last row. Let's scroll all the way down. Okay, on the last row, we'll see that we are allowed to trade, and actually we're already in a trade. We bought here. We bought at 439.18 or some amount close to that on the 18th, and now we're actually waiting to sell this position. Okay, currently we are in the green, in the money on this trade, and the current target here is 446.97. That's the 7-day high, but we haven't quite reached that yet. So we just keep waiting until this turns blue right here, and then we sell that position. All right, now let's go up a little further and see how this played out over time. So let's just go to the top here, and we can see we have an uptrend. So the regime is green and positive, and we keep moving forward, and we wait for a 7-day low, which occurs here on January the 27th, 2020. Okay, and we get in that trade at the closing price, which is 323.50. Okay, we hang on to it until we get a new 7-day high. Before that happens, there's another 7-day low here. Okay, so we ended up selling at 329.06 on February the 4th. Okay, so we got in the trade on January the 27th at 323.50, and we got out of the trade on February the 4th at 329.06. So we got about a 4.5 point gain. So that was a pretty good trade. And then we just wait on the next one. Okay, the next one occurs February the 24th. We get in at 333. Okay, and then this thing really goes down before it goes back up. So this one turns out to be a losing trade, and we get out at 312.86. So we lost 10 points on that one. So now we're actually kind of behind. At this point, the regime, I believe this is when the COVID stuff all happened, and the regime says that we should not be in this. We should not be trading here. This is danger territory, and so we stay out. We don't do any more trading. You can see there's these brief moments where we were allowed to trade, but on those days, a 7-day low didn't happen, so we did not get in those trades. And we just wait this out until the market stabilizes and the regime turns positive again, which happens in here. Okay, so now we're waiting on a 7-day low, and we get one here. Okay, so we get in at 300.61. Okay, and this turns out to be, I think, a pretty good trade. Let's see, 300.61. And we sell at 312.23. So we got 12 points out of that one. So you see how this works. This trades about 10 times a year. So a little bit less than once a month. I mean, a little bit more, a little bit less than once. So 10 times a year, and it's a pretty successful trading algorithm. It has a 70+% win rate. You'll just lose more money on the ones that are losers. So you need that higher percentage win rate. And that's about it. So thank you if you watched all 4 of the videos. Thank you for tuning into this, and we'll talk later.